to have a look at that today, of course. Now, by taking a look at the Polestar shares within the last month, this is what it looks like. It is very interesting in my opinion. What we've got here is a reflection of the current market and the current sentiment around the Polestar company. Naturally, for a few months now, the Polestar share has been falling, and suddenly, within the last 7 days, as this recent news was published in the media, almost instantaneously, there was an immediate turnaround in the Polestar shares activities. In fact, in the last 7 days, trading days in fact, the Polestar shares have risen over 12%. That's a major growth. 12% in 7 days of trading. That's rather impressive, and we want to understand why this is happening. Now, of course, this is not financial advice. It's not supposed to be taken as financial advice. This is just for educational purposes. But we do love to talk about Polestar. It's one of our favorite stocks. It's one of the companies that I do invest in. I'm happy to say, of course, I bought the dip. I did bought the dip. Now, I'm still down around 22%, don't get me wrong. So this being said, it is still a good time for me to buy Polestar because even though it's recovering just a little bit, it is still heavily undervalued. This company, under $5, it's undervalued. Anywhere under $5, it's undervalued. Some might go as far as to say anywhere under $10, and it's still considered undervalued. In today's market of electric vehicles, what they're delivering, where they're delivering vehicles, Polestar is one of the standouts. While at the moment, we're only delivering one vehicle, the Polestar 2. We've actually updated that Polestar 2 for the 2024 season. The new Polestar 2 is upgraded in range, it's upgraded in technology, it's upgraded in many different areas. In efficiency, not to mention, Polestar is bringing new vehicles to the market quite soon. Next year, I believe we're getting the Polestar 4 and the Polestar 3. We're getting 2 new vehicles next year. So this is absolutely great for the company. And let me just say, I recently visited Polestar in Bristol, UK, Polestar in Bristol, Cribs Causeway. The showroom is absolutely amazing. I saw the Polestar 3 SUV. This is not my first time seeing this vehicle. I've seen it before at the Goodwood Festival of Speed. And I've been waiting for quite a few months to see this vehicle in the showroom. So thankfully, it has finally arrived. And it looks stunning. Previously, we've only had Polestar 2s in the showrooms. Now we actually have a Polestar 3 to show off. And this is the car that's being targeted towards the European audience and towards the American audience as well, which is absolutely brilliant because SUVs are the best thing to buy right now. Everyone is trying to buy an SUV right now. And the amazing thing is that this car has the ability to appear large, but not too large at the same time. It's obvious that this vehicle is an SUV, especially in person. However, I was really surprised when I saw this vehicle next to the Polestar 2 2024 updated version. The height difference is actually not that much. Keep in mind that the Polestar 2 has a natural raised platform because it was originally meant to be a petrol engine, a combustion engine vehicle. This is another picture I took of the new Polestar 2 for the 2024 season. As you can see, they've gotten rid of the grille at the front. There's still a small little grille just in the center. They've given us some LiDAR, but now they've turned that area into the smart zone. I think this was the smartest thing they ever did with their vehicle design for the Polestar 2. What's the point in buying an upgraded vehicle compared to the other ones if it looks the same? Now it doesn't look the same. This is perfect marketing for Polestar. The updated 2024 version does not look the exact same. In fact, because of this small difference at the front of the vehicle, they look vastly different now. It is quite obvious to notice when someone is driving the older version of the Polestar 2 compared to the newer version of the 2024. I've seen 2 of these vehicles in Bristol, and those were being driven on the road. And when I went to the showroom, I seen an additional 2 Polestar. This was this one, like dark blue, and there was the black one as well, and the Polestar 3, the beautiful Polestar 3. Look at those wallpapers. I really love those wallpapers. Seriously, just being honest, as an investor, as a fan. Now let's get back onto Polestar. A potential capital raise from the Swedish electric vehicle maker Polestar Automotive has its American depository receipt slide in. That says more about Polestar investors than about the company. Polestar ticker symbol PSNY shows its intention to raise $1 billion. That isn't a shock. Still, the hint on new capital is pushing down the shares sharply. I disagree because we just had a look at the share prices. I'm reading this article from Barron's. The share price have been going down long before this information hit the streets, long before this information was released about Polestar looking to raise more capital. Last year, I believe Polestar received like 800 million from Volvo, 800 million from Geely as well combined. It's at 1.4 million. I believe that's at 1.6 billion dollars. Now that was to push the production of the Polestar 3, investing more in the Polestar 4, 5, and 6 development. So this wasn't push. So this news had nothing to do with the stock going down. I believe it has something to do with the stock price going up. I think this is a positive resurgence in the Polestar shares. That's not just it. In my opinion, I've been watching these shares for the last year, if not a little bit longer as well, because I was watching GGPR as well. I've been watching these shares to know well enough that this company has hit, the share price hit bottom. It hit a point where it wouldn't go any lower without a huge market crash. And that was quite obvious. For investors watching the shares, for as long as I've been watching the shares, it was fairly obvious that Polestar reaching around $2.24, that was the bottom. We wanted to buy more, and I was buying more. We were buying more. The market was starting to buy more. After all, this company did deliver 50,000 vehicles last year. They're looking to deliver 60 to 70,000 this year. And next year, we're looking to deliver at least 100,000 plus vehicles. So we're not doing as bad as people think. And I believe next year, when the Polestar 3 and the Polestar 4 hits the market, especially towards the end of the year, when it's being driven around, that's going to change the sentiment and the notion and the ideal of what Polestar is meant to be as a company. It's going to shift the narrative. And more people will start investing as more Polestar vehicles hit the road. The company will transition into a much bigger EV company in the next 2 to 3, 4 years. They're introducing not just 2 vehicles next year, but following the years after, they're introducing the Polestar 5 Sport GT sedan, and then they're introducing a Polestar 6 Roadster to compete with the Porsche 911 and with the Tesla Roadster. So basically, in the next 5 years, we're getting like 4 more vehicles from Polestar. Am I missing something here? And this company shares, this company is valued right now less than $6 billion. And they deliver 50,000 vehicles next year. We're looking to deliver 100,000 plus vehicles next year. Less than $6 billion in valuation. Yeah, I think I'm confident in buying at $2.24. The only thing I'd like for Polestar to do right now is to lower the shares amount, the share dilution. I believe there's too much shares for that company. But then again, I could be wrong. For a company like Tesla, Apple, having like 1 billion shares, it's not so bad. Or 2-3 billion shares, not so bad. For a company like Polestar, we should be having around 500 million shares. As the price go up, then we can look at splitting shares. But right now, I don't fully understand why we have around 1 billion shares. But maybe someone in the comments can explain this to me. So Tuesday evening, Polestar filed a shelf registration with the Security and Exchange Commission. There is no immediate plans to sell shares at the raised debt. A shelf registration gives the company the option to sell securities by registering them ahead of time. A company has securities on the shelf ready to sell when the time is right. It isn't a great name. The filing is unusual. The stock reaction shows how skittish investors have become over EV startup needs to raise additional money. I don't believe this article fully because, like I said, the share price has been going up since this news has been released. Shelf registration are part of the management of a publicly traded company. Still, Polestar ADRs are down 7.2 in pre-market trading, while S&P 500 and Nasdaq comprised futures were up 0.2 and 0.3 respectively. Rivian stock dropped about 23% on October the 5th after announcing plan to sell 1.5 billion in convertible notes. Everyone knows or should know that Rivian will need more capital to build its business. Wall Street doesn't reject positive cash flow for most of this decade. Still, investors on Wall Street reacts harshly with reasons given ranging from the timing was poor to the rise was a surprise. So they're mostly talking about how much the stock price dropped on pre-market trading on that particular day. Like I said, since the last 7 days in trading, Polestar has gone nothing but up. So let's focus on that. Let's focus on that positive notion right there. Now, Polestar delivered 13,900 vehicles in the third quarter, and it says it's on track to deliver as many as 70,000 vehicles this year. Between 60 and 70,000, by the way. 70,000 vehicles this year will be incredible for Polestar. And it will absolutely confirm the notion, the theory, the opinion that we have, bullish investing on Polestars, that this company is heavily underappreciated and undervalued. But let me know what you think. Do you think this is a good idea for Polestar to be raising money? Do they absolutely need to do this? After all, Geely and Volvo did invest another 1.6 billion into the business last year. So the fact that they need more money, that does stimulate my mind. I'm wondering, well, why are they doing this right now? Did the company always plan to do something like this whilst watching the share price fall? Because Polestar, they've been very relaxed, just watching the share price fall all the way down. So did they plan to raise money as the share price fall all the way down? Does it benefit them strategically to raise money if the share price fall as low as it has recently? Like I said, I believe it's hit bottom, $2.24. I think that's as low as it goes for now. I don't think it goes any lower than that without a huge market crash. So let me know, what do you think is going on with Polestar? Are they raising this money for future developments such as the Polestar 6 and for the Polestar 5? Of course, the Polestar 5 will be beautiful. It's already beautiful. We've got prototypes and we've got concepts. Also, let me know, could this money be used for a secret project? Maybe the Polestar 7. Perhaps that's a vehicle that could be built in Europe. Thomas Ingerlith, the CEO, has said previously that they as a company do have ambition to build a factory in Europe. Could they use some of this money to fund that factory? Perhaps they need a lot more money to build a factory. Factories are not cheap these days because it's not just about putting up walls, putting up a roof and buying the land. It's about equipment. It's about employees. There's so much more that goes into this. Factories are not cheap. It's a long-term investment. Very long-term, like 20, 30, 50 years investment. And that's why Tesla builds factories that are so large, it's got its own climate. Anyway, that's it for today. Thank you for watching, subscribe, and I will see you in my next investment video. Thank you for watching.